Who's this guy? He doesn't do intros. Who's this guy with the crazy hair? What are you watching? Nvidia comes through, does it? Up, down, left, right, BA, select, start. Who knows where we're going with this market, but sideways for the win. Let's rock. Uh-oh, this is where I'm supposed to push the other button. I wasn't ready for that. I thought Brent had me on that. Now we're in trouble. Removing. The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble. Okay, I had no idea how to press that button for the intro. I thought you guys had that, but oops. So I was good.
I'll give you a B minus. B minus.
If I would have pressed the button to do the intro, but I was like, I didn't have it up. I didn't know how to do it. I didn't know what I was doing there. So B minus for me. I didn't have the button ready. Okay.
Well, Christian, do it tomorrow.
You're setting the bar really low for me. I like it. Thank you.
Yeah, that's it. Okay. Go. What's up, Joel? Give us the rundown.
You know what? We held the double close. I didn't look at the double close trick from last night. It's 60-70. We rallied. You know, we dipped and dived and ducked and everything, but we're up 36 and a quarter handle, 6007. I'm going to give you a number on the upside that I like. And if you guys are going to say, oh, Joel's going to say, Wednesday's high. Wrong. Friday's close at 60.29. That is a bogey. That will get us positive for the week, and the Bulls will, they'll wrestle control back away from the Bears, in my opinion. The buck is up 20 cents here, 106.53. TLT down 61 cents, 91.35. Crude flat at 74. Big sell-off yesterday. GLD, well, backing off that old-time high, down 290. 266.13, SLV flat 29.02, Bitcoin up $2,180. Let's just call it at 87K. All right, stop the screen share.
Trade silver? Does anybody actually trade silver? Because I'm going to vote it off the island. I think we do the silver intro and that Joel's rundown every day, and then we never talk silver. I never even look at silver.
What do you want? Should I just get rid of it?
Well, we're asking the chat. Do we want silver off the island? We do gold. It's kind of like silver. It's metal, shiny.
When he takes silver off the intro, that's when silver rallies. I'm ready.
This is the silver bottom. Who would have thought on Nvidia earnings, the recap that we'd be talking about silver? They said, get rid of silver. Somebody said, keep it, keep it. Oh, no, I trade silver. Cancel silver. Oh, my gosh, it's split. Okay, Brent will add up all the votes, and we'll give it with consensus there. Half or split. It looks like 50-50. So, Joel, Christian, Nvidia, holy. It was kind of wild. I mean, it showed the chart here, and if you can zoom into that after-hours action, I don't think the algos even knew what to do with this. I'll give you the numbers here. I still don't know if they totally know what to do with it. Overnight, they've come in. Those overnight buyers, they're just up all night. They only buy stocks because they're all in Robinhood, and they can't short stocks there. Nvidia, 89 cents versus 84. $39.3 billion versus 38.04. That's a beat on the top. That's a beat on the bottom. Their gross margins, 70.6%. Holy mackerel. They have margins. Nvidia sees Q1 revenue, $43 billion, plus or minus 2%. Analyst estimates for $41.75 billion. So that's a beat and a slight raise. Not bad. Not bad. The algos really didn't know what to do with it, though, because if we look at this chart, we chopped and chopped and chopped until we dropped. And then we popped and chopped until we popped. Chopped, pop, drop. It probably went green, red like half a dozen times. Now it's decided to go green. So I don't know what to say. I still have a long-term Nvidia position, my long-term portfolio, but I'm no trade on here at this point in time, just looking at it. And I don't know. I don't know if they've even figured out if they still want to keep this up or not. Thoughts?
Yeah, I'll jump in here, and so I was making a joke like at 5 o'clock. I was like, "Hey, when does this Nvidia come out?" Because it was literally like unched for a while. There wasn't a big move, and yeah, I mean, I think I agree. Investors really didn't know what to do with it, and the commentary that I listened to this morning, it's not like their quarter was great. The demand for this Blackwell system is really strong. But what I read is that the majority of their customers or their big customers are these so-called hyperscalers that are investing in this, and the issue is that where is the next revenue going to come from, because they're making so much money off of the hyperscalers. The question is where are they going to get, if they lose one of those customers, it's a big deal. But how can you get another, you can't find another one of these hyperscalers that are going to pay Nvidia that much money. And that's why the market doesn't know what to do with this, because yes, the results are impressive. The revenue is astounding that they're making, and the
Yeah.
demand for this Blackwell chip and system is so strong. But who are their next customers going to be? And is it also a threat that one of these other hyperscalers, because they're spending so much, that they could actually develop something else or go someplace else? So anyway, that's my opinion on it. I did take it out of one of my longer term portfolio, so I kind of feel naked because I don't have any Nvidia on. I've held it for a long time, but I
Yeah.
think it chops around for a while.
I had a trade on too. You know, the trade that I bought back on the 113. I took that off before the report because I'm like, you know what? I'm just going to sit that part of it out. I still have the initial core position that I'm in from $40. I've sold some of that. I've lightened that up multiple times, but I still have, a chunk that I'm probably just going to sit on forever because I've sold like 70% of the position. So I'm always playing with the house's money at this point in time. So I'll probably just sit on that core position of the Nvidia. But I think you make a good point. I mean, I've always worried about pull forward here too. I mean, we know this AI movement has been huge in the last year, and we know that Nvidia is going to, be there in the pole position. But I mean, how, is this as good as it gets? I think that's probably the question that we need to ask. Like, you got 71% margins. You got, just the growth has been astounding here. And the question is, does competition come eventually? Maybe from places that we didn't foresee, like you're saying, some of these customers, may eventually start to look into developing their own chips as well. I mean, there's been talk about Amazon. There's been talk about, I don't know if anybody can get to the level of Nvidia, but the question is, are we in this period where it's as good as it gets? Or is this pie, that obviously Nvidia is a huge chunk of, just going to get so much exponentially bigger with the growth of AI that it won't even matter? I don't know. It's a difficult, thing. Like I think Nvidia at a certain point, at $100 is probably a no-brainer buy. At 134, I'm kind of wishy-washy. I don't think I'm all in. I don't think I'm all out. And I think the algos don't know if they're all in or all out.
Can we do an option trading teaching moment here with Christian?
Yeah.
Go ahead, Christian. Talk about your strategy. Talk about the sentiment that we kind of had even before this report and how you played it with the options market.
Yeah, absolutely. And by the way, what Dennis just said is like, the market is trading in a range. I think this stock trades in a range too, and I think the dips get bought and the rips get sold. My thought for earnings was, we looked at the show on yesterday. We talked about what the implied move, which is very important when you're going to an earnings report, what the market maker is expecting. We talked about yesterday with SMCI that there was an expected move of 24%. The stock went 24% when they announced that they filed their 10K. So the implied move, the options market makers were estimating that Nvidia would move 10% for its earnings. We looked at the last earnings report, which I think is also important to look like what the company did on the last couple earnings reports. Last time it was flat. I think it was up about 0.5%. So my thought was that this stock isn't going to move that much. One strategy that you could do is what's called an iron condor, and you're selling options rather than buying options looking for a move. You're taking advantage of that heightened implied volatility, and then you're hoping that if the stock doesn't move much, right, what will happen with the options is once the news comes out, you get what's called vol crush, right, and that volatility will come down as long as there isn't a huge move. So with Nvidia sitting here at 135, what I looked to do yesterday was sell premium. Now I don't sell an outright, like I don't go naked naked call or a naked put. What I do is I put them in a spread so that you're defining your risk, which is very important. And what I did yesterday was I sold a weekly call spread. The strikes, now I'm getting close actually to the high strike, but I sold a 138 145 call spread, and I collected about $1.80 on that trade. So not huge reward. And then what I do couple that with is selling a put spread, and I sold a 123 116 put spread, and I collected $1.50. So all in all, you're collecting $3.30. You know that you could only lose in one direction.
Side.
The stock can't go both directions. So you look at how much you could lose, and it's about 50% of that. So you could win if the stock doesn't do much and doesn't blow out to the upside or downside. I collect 330. If it does move huge in one direction, then I lose about 370 on the trade. So that seems so far works out, and you could always defend that too. If the stock starts to rally up to my upward strike 138, then I could go out and I could buy some stock to kind of hedge that. But I don't think I'll need to. I think the stock's going to come in a little bit. What do you guys think? Do you think that this movement right now, which we're higher, do you think that holds throughout the session?
I don't. It's hard to predict at this point in time where the stock's going to go. But I love the strategy. I mean, that strategy in itself is just like just bringing in premium, because people are basically buying lottery tickets. Like people are in there. We knew the expected move was 10%. It seemed high to me too, because we just haven't seen Nvidia moving like that, and it's 2% here right now. So I love the strategy of like just raking in some premium. And then obviously, what a lot of people I think do wrong, Christian, is they'll just flat out write the puts or write one side and not do the spread. And then what happens, in a worst case scenario, is they have a blowout quarter and the stock's up $25, and you're like, oh my gosh, I'm getting absolutely crushed on this. So I love the trade first, Christian. I don't know if anybody knows the price action. I think we're just going to chop around. I see major resistance. Joel, taking your job here for a second.
Yeah, you know what? I was really enjoying listening to what you're saying, and then sometimes I get my hot take. I'm like, oh man, this is a 3-star, this is a 4-star. You got to sell it here, you got to buy it here, and a lot of times I'm wrong. Sometimes I'm right. But now I'm just looking at back, and I'm going back all the way to October here. October, November, December, January, February. And look at how much time this stock has spent between 130 and 140.
A lot.
I mean, I know, you bought it at 130, you weren't happy when it went to 113. And when it went to 140, you were unhappy, but to me, it's just in a major consolidation phase. And then Christian, I mean, it couldn't be any closer to the 50-day moving average. And just think about all the media talk, a couple earnings reports, DeepSeek, like all the stuff that's going on. And this thing is like, oh, if you had it, if you crawled in a hole at, mid-October, you're like, oh, this thing's at 130. Huh? And you come back 5-6 months later, it's at 135. So
hasn't moved.
Yeah, it really hasn't. For all
its talk about and everything. This is what they do. They have big moves for big fundamental information, the big growth. I mean, again, Dan Niles on CNBC was the reason that I bought this in January. Well, actually, I think it was December of 2023 and January of 2024. And I bought it 3 times in the long-term portfolio. You guys know that if you're watching the show for a long time. He was on CNBC. And he said, NVIDIA's trading 24 times forward earnings, and the earnings are going to grow like crazy. This is the biggest no-brainer buy out there. And I was like, I was thinking the same thing. And a lot of times, you just look for confirmation of your own views, and you see somebody as smart as Dan Niles talking about, the growth here, the growth that's probably coming. AI was not going to go away at that point in time, and it was a no-brainer. Well, now the stock has tripled since then, more than tripled. So it's like, okay, well, it was $1 trillion, less than $1 trillion when we started buying it. And now, you're $3 trillion or more. So it's not that easy to go from 3 to 9.
No.
So it's just not going to be as simple just because the company is so big now. So that's probably where it's struggling here, is now it's digested all this growth. And then, we know the story, and everybody knows, that the company has just, been unbelievable. But at this point in time, what's the next story to carry it? Maybe there is, but I don't think it's going like 3, 4, 500. It's going to be hard for it to go to 3 trillion to 9 trillion. That's a lot more difficult. 1 trillion to 3 trillion is easy. 3 trillion to 9 trillion, not so easy. So it's not like a triple back in here. And then, maybe it's just consolidation to eventually start going higher. So maybe it can get up to 140, 150, 160, 180 and start going. But Christian, brought up a lot of good points too. What if, there is competition coming? What if, there's a lot of pull forward? What if, the hyperscalers are, I just mean, there's so many, question marks here. And I think it's just a big battle between the Bulls and the Bears here. And that's why maybe we stay range bound for a while.
Yeah, just one final comment on this. I was talking with CC Legator yesterday, and we were lulled into complacency on Friday. Remember, we're like, oh, we're just gonna hang up here, and then kaplooey, we got slammed on Friday, but able to recover. And I think with the Nvidia, and I think you're seeing in the market too, is that a good report may not be enough just like to blast us back to all-time highs, but if they would have missed or given lower guidance, then that would have been an excuse to whoop up on the market. So I mean, sentiment, how the market's thinking, how people are positioned, it's really all summed up in that report. But let's go to a bad report. Let's go to Salesforce.com. They beat mixed report 278 versus 261. Yee-hoo! Well, if you hit the button on that, you missed the sales miss, 9.9 billion versus 10.3 billion. Looking at the guidance here, guidance isn't great. Now here's a stock that, man, I mean, it's in the doldrums here. Let's talk about CRM.
Again, dip buying came in. Tech darling, huge support down at 280. I don't know what the low was, but I saw it in the 280s. How low did we get, Joel? Do you have it?
Oh, 275.40.
Oh, got down that low. I did not see that. I saw it in the 280s. So, I mean, they just can't help themselves when you get these really loved stocks. Again, we're still in a buy the dip environment here. Christian, you were going to say what your thoughts?
I was just looking at the technicals, and yeah, it was a underwhelming report. The stock sold off into, the stock sold off into the report towards the end of January. The stock was trading at around 360. And it's, you would think this was more of like a layup to say, like, if they did have a decent report, that I thought the stock would have rallied, considering what the recent trajectory of the stock price is, but not so much. And it seems like they failed to deliver. So I don't know. This one, I think you kind of have to put to the back burner of software stocks and look at other places. And we do have a couple other reports that did hit pretty decently. So again,
did you have the expected move on this one, Christian? I'm just curious because
look at it.
Yeah, because I mean it's down 11 and it was down another 20. So man, 30. I don't think it was 31. I mean, I think they got way below the expected move. I know it's a high.
I think you'd be
about
surprised.
9%.
No, so it's on. It's pretty close.
Wow.
Because you're saying 275, so a little bit outside the expected move and then bounce back inside it.
Yeah. I mean, I probably when it went that low, you might have been looking, oh, I'm going to get 270 here, but nothing really at 275. But yeah, folks, that's where we traded, and now we're back up here. So when I see this kind of chart, I just kind of like, well, the low of the day is in. Unless you completely have a collapse in the market, you just have to pick your poison. I mean, there was even decent support, at 285 to 290, coming back on the upside. You might have to wait a little bit for a gap fill at 306, 45. You want to switch to a good report? Let's go to a good report.
And the algos, I don't know what they did here too, but I'm telling you, man, I keep saying it. The algos, holy, they get it wrong a lot of times here. You got to look how low Snowflake went on that report. So I'll give you the numbers. Joel gives you the low of the after hours, because on the initial report, they hammered the stock. 30 cents versus 17, 986 versus 955. It looks like a huge beat on both the top and the bottom. The revenue, though, Q1 revenue slightly light, 955 million to 960 million versus 1 billion. That is probably why they hammered it. How low did we get? And it was a blink of an eye. It was down there for like a minute. How low did we get?
Oh, wow. I'll tell you, I had to look because I got to get this gray line a different color. So listen to this. It went to 153.25.
Down 13. It
Okay.
was down there for like 10 seconds. And then
Look
they
at
just ripped it. Ripped it.
look at this. Do you want to see this is going to astound you guys.
Yeah.
December 30th low, 153.12. December 31st low, 153.38. Right in, it went right to this double bottom here.
At 153.
Yeah.
Yeah.
And now you're $34 above it.
So I got
I don't
multiple
know.
questions here. I mean, I think a lot of times there is literally algorithms that are just punishing other algorithms. Because what happens is, and I did algorithmic trading for what, 10 years, Joel? I
Mhm.
did it from 2004. Like I killed it in 2004, 2005, 2006 because I was one of the only people doing it. But I did it from 2004 till about 2010. I know algos very well. I had a team of programmers because I'm not a programmer. I had other traders at Bright Trading that were doing their own algorithms, but I had some pretty good ones running. I tell you, what happens is the algo reads the lower guide, and they automatically hit everything down in the book. They're going to say if it lowers guidance, we're hitting down 10 points, everything. So they clear out everything. Now there's nothing in the book. It's empty because you just cleared the book. The book doesn't refill immediately. You just cleared it out. So you cleared it out down to 153. Then you get, other algos and saying, I honestly think this happens. They know you just cleared it and they buy this up a little bit. Let's nail this. And then the algo's panicking here probably. Nothing to buy because you just cleared out all the bids and offers. And bang, it's right back up. And then they start ripping it higher. I mean, we're up 21 points here. I maybe on the conference call was some stuff said. I didn't listen to the Snowflake conference call, but the guide wasn't even great. So it's like I don't totally disagree that the report actually wasn't that great for that initial algo to hit it. But I mean now you're up 21 points. So you're talking about a 31 point pop from the lows, 32 point pop from the lows. This is absolutely incredible. These moves here. So, I mean, somebody last night, whoever ran that news algo, is down a lot of money in this. But, I mean, where do we go from here, Christian? I mean, you've now traded out the last month, that basically in this, overnight session, we've traded over a month of movement here from being down to 153 all the way up to the highs at 187, up to 194 is where we were just a few days ago. What are your thoughts on this?
Well, I think if you bought the dip, going into the earnings report, and again, it's a lot of risk to do something like that. This price action, which is great, it's one of the biggest movers pre-market. However, it gets you right back to where it was last week when this thing started to sell off. So, I think at this point you got to sell the rip. You're back in the range. I don't think it breaks out. It's a good quarter, but it's not, unless it breaks 194, which is kind of around the highs of last week, it's another stock that's in the range. And again, you could think about in the range, buying the dips when it goes down if the market's weak. But then I think you got to sell the rip right now. That's what we're kind of facing right now, because I think this is very difficult when you see a stock that rallies as much as, what is it, up 13% or something, and it goes right back into last week's range. I don't know what you could do with it there other than, hey, be happy and
I
take
know
some
what you
good
do with it.
profits.
I know what you do with it.
What do you
If
do?
I had this on for a scalp or a trade, or I bought the dip, I'd already be out at 186.
Yeah, I'd sell too.
I wouldn't be out. I wouldn't be asking any questions. And if I had this stock long term and I saw, the dip to
I'd sell that too.
160, I saw the dip in the pre-market, I would say, you know what, this thing may go to 198, but I'm going to put in a 186 sell stop today. And if it comes down and it takes me out at 186 and it bounces and it goes back to 195, then I wouldn't have a care in the world. But man, just getting it all back, considering I'm mixed on doing a retracement now, because you go from the pre-market low, do you go from that low 2 days ago? But if I was a long-term investor, I'd keep a really close eye on 186. I mean, that's traded up at the highs of the pre-market session, looks strong as strong. So, maybe not today's not the day that it goes back down to 186, but that is my level there for Snowflake.
I've got a question for the chat and for you guys.
Okay.
How many gap and goes have we had this earnings season?
Ooh,
How
gap
many? Can we think
yeah.
of a few? Like, has there been there? I feel like there's been a lot of gaps and then
crap.
coming back in and not holding the gains. And again, maybe it's selective perception on my part, which is why I'm asking the chat as well. But can you guys look here, like just even looking to the major earnings reports here, who had big moves? Like thinking about the majors, obviously, there's been, the Magnificent Seven have all reported here now. But I mean, I think about even like, not a major, but Celsius, it took 3 days and it filled the whole damn gap, giving it basically the whole thing, giving it all back. I feel like this has been a theme this earnings season where the stocks gaps and craps. I like that Dikembe. I mean, that's kind of what has been happening here. So where you've seen big gaps and then, they come back in. And, Palantir was gap up. It's kind of filled it right back. And they did. It filled the gap back. It took a little while, but, eventually just came right back in. I mean, the opposite, maybe not occurring as much because Microsoft gap down has just continued to go down. So I don't know if it's happening the opposite way or not. But yeah, Burke.B so far spinner is a gap and go, but it's only been 2 days. So we could argue Burke.B, but honestly, even Burke, it was 485 to 503. It's back to 494. We've just filled half of it. So, I mean, can we fill the rest of it? Maybe. So I think, there is IBM still holding it, so we're getting some good ones. Meta's giving it back. I'm just looking here, just trying to get the theme here on the gap ups, not the gap downs. Bill.com, they're giving the chat. I'm just going from the chat here. Gap down and it's continued to go down. So when they're missing, it doesn't look like they're, that excited to be coming in. But when they're popping, it seems like they're having struggle holding. Airbnb is another one. Alex, fantastic example. Big gap up on the earnings, 140 to 160. 7 days later, it's giving it all back. So, I mean, the proof, this is what you do as a trader, not as an investor, but as a trader, is you look to what is the theme. What is the theme for this earnings season? I think the theme has been to absolutely sell the rep. So when you see Snowflake up 12%, there isn't a lot of examples. Maybe it goes up the next day. Airbnb, I think, went up a little bit more the next day, but then eventually they start to leak. And why is that? Because there's a lot of people who have been absolutely punished in this market. I mean, we can say the S&P is only down 2%, but a lot of these retail darling stocks, like your Palantirs, Bitcoin, there's people, that are very heavily even on margin on some of this stuff. It hasn't been a good few weeks for a lot of retail traders. So I think there's a theme here, and the theme is still selling the rip.
Yeah, I mean, I was just going to cover, we've got economics coming out in 2 minutes. I was just going to talk about VST, and this is the other part of Nvidia too that I wanted to mention is that now VST had earnings this morning, but there's a lot of stocks that are moving more than what Nvidia did on earnings that are affected. Like Meta is up nicely pre-market. So, again, Nvidia is not, Nvidia earnings doesn't only affect Nvidia, it affects so many companies. So it's giving a bigger effect to the other names that are involved in AI. I wanted to jump to VST because they had earnings this morning. It's another one that really sank over the last week and is basically coming back to the range. I would watch this 161 level in VST. And with 1 minute to go before we get economics, I also just wanted to mention NRG, which I'm starting to favor because look at what NRG did on earnings. So there's a difference here. I like when names clear their previous range and begin to kind of build out new highs because now there's nothing holding it anymore. It's blue sky for NRG. So I'm favoring NRG out of this power group than some of the others. And, I may look to put NRG in my long-term portfolio because I like the chart. It's also cheaper in terms of just like PE ratio. Now it's up a lot. That's the bad thing. And I know Joel's not going to like that, but
no, Dennis, are you wide here? Because
sure.
there's quite a few numbers.
Okay.
Yeah, thank you, Brett. Yeah, I don't. Yeah, sorry to interrupt you, Christian.
Thank you. No, thank you.
Yeah. I'm just.
But energy. I mean, and again, to Christian, to your point, VST did report, but I agree. I mean, when stocks are making new all-time highs, there's nothing.
We're moving down. We're moving down. What do you know?
A little bit.
Moving down.
A little bit.
A little bit. A little bit. A lot of bit. There we go. There's
We got
the sky is
Brentster. You got the
falling.
numbers in the background. Can Brent pop in here? Give us the numbers if you've got them, Brentster. He's trying.
He's kind of has a
We got
raspy voice.
jobless claims 242 versus
Okay, Brent.
221, so that's a jump in jobless claims. The GDP comes out 2.3 versus 2.3, so right on the screws for GDP.
Yeah.
Personal consumption 4.2 versus 4.1, that's a little bit hot. Durable goods 3.1 versus 2.0, so that's a beat in durable goods. We haven't seen too many beats really, but initial jobless claims for the week is higher than, as mentioned, 242 versus 221. Last one, cap goods orders non-defense 0.8 versus 0.3. So a couple beats in there, and you can see bonds are starting to sell off a little bit. But the bad news recently has been bad news. Is the little bit of good news, is that going to be good news, or is that also going to be bad news?
It's all just, we're in this situation where we're just choppy. So it's even hard interpreting the economic data. That's why it's limited moves here at this point in time, like even analyzing everything. We're just in a very much case where it's a big battle between the bulls and the bears here. And that battle, continues to go on here now for 2 months. Like again, S&P started the year right about where we are now. I mean, we're up a little bit. We're up like maybe 90 points. So we're talking about a 1.5% from where you started the year. But yesterday or 2 days ago, we were right there where we started the year. I think even the economic data is hard to interpret at this point in time. And when you come in line on the GDP 2.3 versus 2.3, those are always tough, for anybody to interpret. PCE price index up slightly, 2.4%. I'm not sure where the estimates, if we said what the estimates were on that, but I mean, this is again just hard numbers to interpret here as to where stocks are going.
We were at 05.5 on the 8:30 turn of the bracket, and we're at 05.5 right now. So just a lot of indecision. That dip was quickly bought here. Once again, I'm going to reiterate that number. Friday's close at 60.29. I know we just missed getting there yesterday, but that, I think if we get above that, I'll feel like the Bulls have wrestled control away from short term. I mean, long term, Bulls are in major league control, but just with the price action on Friday, the follow through on Monday and Tuesday, the chop on Wednesday, that's what I'm looking at. I see our guest lurking in the background.
Yeah, we can get him in here.
Yeah, what do you think about that?
Yeah, let's bring him in.
Jim Tassoni, CEO of Armor Wealth Strategies. Got to stick a little sports in, Jim. You got lucky last night with was it an over a half court 3-pointer?
It was a 3-quarter court shot. There was definitely some screaming going on in the house. Wife came flying down the stairs, thought something was wrong. But, we up 7 with a minute and a half to go. That should never happen. But I guess sometimes it's better to be lucky than good in sports and the markets. So,
okay. All right. So you didn't lose, but you've had a few losing trades lately. And I don't know. I mean, I didn't think anybody had any losing trades ever in this market. But you wanted, at the end of the last show, you saw some things in the chat. You read the chat, and you wanted to address those. You wanted to do that. So let's start out with some of your losers.
Yeah. And again, first of all, I'll say apologies to the chat. I'm not as good as Dennis, Christian, and Joel on following the chat while I'm talking. So sometimes I miss questions, things like that. And I never want anyone to think that I duck or shy away from losers, because after doing this for 20 years, and I think you guys can all speak to this too, losing is just a part of the price of admission, and I lose as much as I win. But the important thing is risk management. And if I wasn't a good risk manager, I wouldn't be talking to you guys 20 years later, because That's the most important thing. So some of the trades that we laid out, I think late into last year and then early into this year, especially on the short side, and shorts are tough. They're always tough. You know, I came on and talked about a short in Abercrombie, a short in Crocs, a pairs trade with Ventas versus Simon Property Group in the real estate space. All three of those trades were losers. But I think what sometimes is missed, and we'll go with I don't mean to lecture or educate too much in this space, but I think what's sometimes missed is the nuance when we come on and we talk about trades or ideas, and the nuances in position sizing and position management. And so I went back and looked at those trades, and all three of those trades were losers. But when I'm taking a short position in an individual equity, I rarely, if ever, have a larger position than 1, maybe 2% of my overall portfolio. And so even if I'm taking a 10 or 20% loss in that position, we're talking about 10 or 20 basis points of my total portfolio. And so those three losers together, I went back and looked, were 0.59% is what I lost on those three trades. And then conversely,
what were those three trades again?
It was short Abercrombie, short Crocs, and then I went short Ventas versus long SPG, Simon Property Group.
Okay.
And then I went back and I looked at that around the same time I made that TLT call. And we didn't get to talk about it last week, but I ended up completely covering my TLT short midweek last week. I'm out of that trade. And that trade alone, because of the sizing, being an ETF, so I can be a little bit larger, I made 1.22% on that trade. So 4 trades, 3 losers, 0.6% higher across the board. So I think that's really important from a risk management standpoint to point out that nobody on here, unless you're on Twitter, I know, I get it, or X, is perfect in their trading world. A 25% hit rate and still positive across those 4 trades.
I like those numbers, Jim. I wanted to talk to you. This is just a great conversation on position sizing here, because I'm similar. Where I probably don't put, in the long-term portfolio, I might go up to 5% if I'm really convicted. An average size position for me is usually 2% of my portfolio. So if I really like a stock, I put 2%. I know Nvidia at one point in time was up to 5% just because it had grown so much. Tesla at one point in time got up to like 7 or 8%. That's as big as I ever get. Again, probably because it grew so much. Where do you enter? How do you position? Is it always the 1% to 2%? Do you get convicted and go bigger sometimes when you're really convicted? Talk about, do you add to winners? Talk about, position sizing.
Yeah. So basically the way I look at it is, again, it comes down to the type of security that I'm entering. Long or short makes a difference. I'm never going to be as big short as I am long because of the asymmetric risk of the trade. But so for instance, let's just go to the long side. If I'm going into individual equities, I'm similar to you, Dennis. I'm usually starting out a position. If I'm going long an individual equity, it's somewhere in that 2 to 3, usually 3%. If I think this is an unbelievable opportunity, we've got a 2020 or a 2008 type market where baby's being thrown out with the bathwater, maybe I'll go as big as 5, but I'm never bigger than 5% in any individual equity. Now, if I'm going into an ETF or a sector position, let's say I really like healthcare or staples or some sector, I may have a starter position that's double that size, like a 6% position. And then finally, if it's something like a long bond position, let's say my indicators, what I'm looking at, I'm saying, oh, I really don't like the markets here. I want to hide out in treasuries or some type of fixed income position that's got a lot less volatility. That could be as large as a 10% position when I take that on. So it's really dependent on the volatility of the position, the direction of the position, and the conviction, kind of a three-pronged approach.
How the hell did you lose on the Abercrombie and Fitch?
So I looked at that too. It was a short call.
Yeah. So, oh no, I'm sorry. It was a long call.
Okay.
Okay. I was gonna
No,
say,
no.
You're
That
short
one was
Abercrombie
long.
and Fitch. It looks like a genius call.
I'm sorry. That one was long. Crocs was short and Ventas was short.
Okay, I was gonna say, holy man,
I
you got like
apologize for
shaking
that.
out the worst possible time
No.
outside of that.
Abercrombie, I tried to catch that knife and my hands got pretty bloody.
I was just going to make one other quick point here too, because this is a very interesting conversation, and your timing also, you could be right with your thesis, but sometimes, and that's why I think like shorting is difficult too, especially like while stock prices are going up and so forth. But you could be right about your thesis and about you could be spot on. But if your timing is off by like a couple weeks to a month, it's a lot of pain to absorb, and that happens on the long side too. It's not so much just on the short side, but it's so it's really tough. And I think what Dennis said too about position size is important too, because if you've got the right position size, you can handle the bumps and you could be in a position longer. But if you get too large a position, you could really get shaken out, especially if your timing's not perfect.
Yeah, and to that point, and then we can move on or we can keep talking. I love this conversation because I think it's so vitally important to to traders and investors alike. But when I first started as an analyst at Morgan Stanley, my very first boss there, he told me something and it stuck with me throughout my whole career. He said, "It's okay to be wrong. It's not okay to stay wrong."
I thought I invented that saying.
Were you his boss at Morgan Stanley, Dennis?
And so maybe Dennis, maybe I heard it from Dennis, but I also maybe my boss heard it from Dennis. Who knows? But no, that's how I look at every trade, and I always know my second trade first. That's another great one. Know where you're wrong. Have conviction when you're going in, but also don't be dogmatic in your trades, and be somewhat unemotional when it comes to, okay, this didn't work out, on to the next one. Because like I said, I look at my stats. I don't even think I'm 50% right. I think I'm like 48 to 49% hit rate on my trades. But the position sizing allows me to be profitable.
China.
It's everything.
Let's talk China.
Yeah, China. Now we can pat myself on the back a little bit. Because this is one that, we've been in for a while now. I don't necessarily know that I'd be initiating a huge convicted position here, but gosh, I don't know about you guys. I mean, I look at this trade and you almost think this thing, and we got a little bit of a pullback, but gosh, it just every day, it just seems to, any little pullback just gets bought back up and it just keeps powering higher. The momentum's behind this. I'm in right now. I'm in the FXI. I'm also in BABA. I'm in Tencent. I'm in JD. And we owned some of those stocks. We rode that ride last year. We took it up, we took it back down, and now we're back up again. Lightened up a little bit on some of the individual equities, but still one of our largest sector concentrations. We really like this sector right now. We think there's still room to run here.
Okay. All right. Canada. You moved out of your Canada position for a scratch. Talk about the setup and why the exit.
I think there's a couple of points. One, again, going back to that idea of not being dogmatic. We had some really good conversations around Canada and the ETF and all of those different things on this show. And it led me to do even more research into it. And a lot of it, I think, had to do with price action. We've gotten some news out of the administration on the tariff front that I felt the ETF should have responded better than it has. And when I see news and the ETF, while it's been positive the last couple of days, we haven't seen the move that I thought we would see in this situation. And when a trade happens like that, and I think Christian either last week or the week before talked about that, when you get into a trade, you want to see some confirmation. You want to see the position moving when it should move. And when it doesn't, I'm going to get out and I'm going to look for other opportunities. And so I think now we've sort of pivoted and now we're looking at Europe and some of the European equities and European ETFs as maybe a better way to play this tariff game. So that's something we've got a close eye on here as talks continue.
Well, I'm just going to jump in really quick because what I find unusual with this market of rotation, but look at European banks. This is EUFN. I mean, you talk about something that's kind of like a sleeper that's going on right now is European banks are breaking out. Here, I can show my chart. Really
Go
quick.
ahead.
But yeah, this is EUFN. Europe. I tweeted this out like I think a couple days ago, and here's the weekly chart of EUFN. I mean, you're kidding me, right? I mean, we're talking about all stocks going down and stocks in a range and so forth. That's not what's going on with some of these international indices.
Yeah.
This is, believe it or not, so this ETF was created. Sorry, I'm just going to go off on a quick 10-second tangent here. But I think this ETF was created in 2011. They didn't have a European financials ETF back then. But it is, since this ETF came out, this is at a new all-time high. So again, like this is like two things here. International is not getting the attention that it should be. And number two, it's besides it not getting the attention, but there's some really interesting things that are going on, and it's tough to get really that bearish the overall market when you've got European financials breaking out to new highs.
Is someone saying something somewhere negative?
Barkin is speaking, but I don't know if
We're
anything
leaking a
really
bit,
Yeah.
I just
sorry
think we're
about
kind of
that.
fading.
And you know what's interesting, because this ETF did come out 2013, and a lot of people think, oh, European financials are making new all-time highs. But if that ETF would have came up in 2005, you would see a completely different story. Because just for fun, let's pick on the main ones. Barclays, where the all-time high on BCS is? Stock's $15. It was $57 in 2007. Deutsche Bank, which people are saying, oh, look at Deutsche Bank making new all-time highs. I'm not saying I know you know this, Christian, but a lot of people have been saying this. Oh, Deutsche Bank's new all-time highs. No, go back to 2007, it's $120 stock. So what happened
Deutsche Bank is not
was
making new highs.
They never recovered from the financial crisis. None of those European banks really never recovered from it. They're trying, so you can see this long-term chart when you look out.
All right, there's a headline now about Trump. April 2nd reciprocal tariff date remains in full force. I don't know if that's driving. Let's see what market. Yeah, markets are selling.
How many times are we going to move?
It's going to be tariff talk nonstop, because yesterday we rallied a bit
March 4th,
because there was a story that the tariffs going on Mexico and Canada had been postponed another month.
Yeah.
And I know we rallied on that in the afternoon. That story is obviously false, because we're seeing here in the chat being reported, and Trump is saying tariffs on Mexico go into effect March the 4th as scheduled.
Yep.
So he is squashing that story that he was kicking the can down the road for another month. Tariffs are spooking this market. Jim, I want to get your thoughts on tariffs here too. I know we were talking European banks, Christian, but this is obviously breaking news and we just want to jump in. Jim, what are your thoughts here? I mean, this tariff talk is moving the markets, whether it's bullish, bearish. Like, I think it's not good for the markets, but the tariff talk continues to move the overall markets here. We're tanking again on this Trump, story. Trump continues to move the markets here.
Yeah.
How do you trade this? Like, how do you position yourself when you're getting whipsaw headlines every other day?
And it's so difficult. And I mean, we remember this from 2016 to 2020, dealing with, the tape bombs and everything that goes on. But I think, again, that was part of the reason for our exit in the Canadian ETF was, I think you got to watch for reactions. And there's no perfect science to it, but either overreactions or underreactions can tell you things. And when that story broke yesterday about postponing the tariffs, and I saw the Canadian ETF rally a little, but it was sort of uninspiring. And for me, that was the idea that, okay, now this convinces me, and I was out the day before, but this convinces me that, I just don't see this trade as the asymmetric type of trade that I like to have on, where I think there's a huge pop to the upside, if these tariffs get postponed, maybe if they get completely scrapped, there is, but I don't think we see a complete scrapping of tariffs anytime soon. Trump is all about the tariffs, at least jawboning the tariffs, if nothing else. And this is going to be this back and forth whipsaw conversation for the foreseeable future. So look for opportunities to buy or sell overreactions in either way. I guess back to your point, Dennis, and the rest of you guys, the fade trade in either direction, I think, continues to work in this market.
Yeah, Jim, I know you were cautious. You've been cautious over the last couple months, and we were, had you on a couple weeks ago, and we were like bumping up 61.50, 61.60, and you're like, well, we're like, well, I just don't believe it. I'm not convicted. My indicators, the fundamentals are there, and you stuck with it. And a lot, the market can go in your face, but I like that you have a thesis and a plan and you stick with it. And I just want to ask you, because I know what my level is, what would get you really bearish this market? Really wow, Katie bar the door. We're going to 5,700.
Yeah, I think we're teetering sort of, in my opinion, on kind of a area here that I think the market needs to. And I'll talk the SPY just because that seems to be more of what people follow these days anyway. But for me, I think you got to look at, and let me make sure I get this level exactly right here. I think on the right now we're trading right around 595.85 ish. For me, 592 on the SPY is a level in the sand. If we close below 592 on the SPY, that is an area that I think you could get more bearish and see more downside follow through. So 592 is an area that I'm looking at closely.
You're looking at that on a closing basis. For me, for the SPY, because it doesn't trade around the clock, Dennis. To me, the definite line in the sand. You had that deep seek low on the third at 590.49. That backs up your January 15th low. And then you just came down and you hit that on Tuesday. So to me, also looking at the monthlies, 3 monthly highs in the same way, I think, you're going to have your seesaw battle. I said, but boom, what if you crack that 590? And I know you use 592 on a closing basis, but to me, man, that is the Katie bar the door level.
I'm gonna turn host here for a second. What's your level on the SPOOs, Joel? That bottom.
It coincides with it. The deep seek low was 59.35 and a half right here, and then the low the other day was 59.24.
Okay.
So that's it for me. But the SPOOs can go. They can go 59.24 or 59, 14, 24, and you're like 5,900. Here we come. And then it's like 59.50 in your face, and you're like, what an idiot. So I'll wait on the closing basis too. But we're leaking now. Jim, we kept you a little bit of overtime. We are not going to pay you for the overtime segment. We got to get the ticker time here. This is it with Jim Tassoni, Armor Wealth Strategies, Michigan State fan that I can tolerate. Jim, we'll talk to you. We'll talk to you again real soon.
Thanks, Jim.
All right, have a good week, guys.
Great stuff.
Thanks,
as
Jim.
Always. Christian.
Okay, now, Dennis? What now, Dennis?
Well, that's the tariff talk. So it's literally the headline that's driving it. Proposed tariffs that are scheduled to go into effect on March 4th and will indeed go into effect. That is what Trump just said. So Mexico, Canada, EWW, you can bring up if you want to see Mexico. It has turned red here now. It was way up this morning. That is not the case here. Well, not way up, but it was up to
Russell
20.
futures are now down. They're getting hit the most. They're down 20 basis points. The dollar's moving up. The VIX is moving up. So, I mean, this is not an easy market. It seems like every day. With that press, I was just say this real quick. The press conference yesterday, I was just waiting. I'm like, because you know that in the Q&A, someone's going to ask about tariffs, and it just felt like yesterday, that press conference, I was listening to it yesterday, and I was like, it's just a matter of time. When is somebody going to mention tariffs? And then it's a tangent on tariffs. But this is not easy to deal with. We're getting this now every day. And I just want to make a real quick point is that you can't be stubborn. If the market's gonna take off in one direction, I was a little bit stubborn with that yesterday. I was like, I didn't think that we were going to give back all the gains yesterday. So anyway, it's a very tricky market. It's a very headline driven market, and you can't stay stubborn right now.
I think there's a very clean setup here in the Canadian banks, and I have no idea why some of these Canadian banks are trading in their all-time highs. I can't understand. So as much as, we just talking the European banks and they're on the comeback trail, and maybe there's a reason for that because, Europe is not really in the wrath here right now. We're talking Mexico, Canada. But, Bank Montreal, I've had that in my long-term portfolio for 20 years. I sold it 2 days ago, all of it, because I'm like, it was gapping up another 4% on earnings. And I'm like, don't they know what's coming? I'm like, doesn't this market price in anything? I'm like, how can this be good? So, I mean, the banks, not only are you getting a setup where you're selling the banks, Canadian banks, near all-time highs, but you're like got this potential huge issue here coming at you. So, I mean, Royal Bank reported this morning, it's up on earnings. I think these are all sells right now. Again, maybe if they do a deal, if you get a deal, then this trade completely goes the other way because they're going to pop up. But I mean, we can look at the EWC and say, well, it's just kind of hanging out. Even the EWC, what business does this have? Hanging
I don't know.
near the highs. Like, what business does this have? I'm telling you again, this is potentially the dumbest market that has ever existed. It is so dumb. It doesn't even price this in. None of this gets priced in. I mean, you think he's bluffing. The EWC says Trump is bluffing. I don't think he's bluffing. I think he's going to put tariffs in. And I think the day they go in, it's going to be like, oh my gosh, sell Canadian stocks. He's been telling us this. So he kicked the can down the road for a month. Now everybody just thinks he's bluffing. I don't know if he is. Do you want to buy EWC near all-time highs?
Short? Will you short it?
Yeah. Yeah, I think you should. I actually was just getting out of all my Canadian stocks in my long-term account, but I think maybe it might be time to actually initiate shorts here. The risk, though, Joel, in the short thesis,
I know.
what if he does
agree.
come up with a deal. But I just think about Canada. I'm more worried about Canada than Mexico because he doesn't talk about Mexico as the 51st state. He really wants to make Canada the 51st state. He said it. It's not a joke. So if he's going to do that, the way to do that would be to break us economically. So I didn't think the U.S., attacking us from an economic standpoint is the worst possible thing for Canada. So I just don't know why you'd be buying EWC right now. I think it's got the potential to be a disaster. I don't know. Again, we don't know. Nobody knows what Trump is,
No, I mean, you don't know what's going to come out at like 10:48. We've reached a deal with Canada. I mean, you don't know.
But why, if he really wants to make us 51st state, why is he going to do a deal?
Let's move on to some tickers, guys.
Thank you, Christian.
Yeah, we
need to
talk about some stocks. And I know that this headlines are moving the market, so it's difficult not to. But Amber, go ahead, Joel.
They had a good report. For me, I just look at this $85 level. Boom, you peaked at 85 here, 85.15. You just missed it shy here. I can't tell exactly where it went in the pre-market, but 85, that looks, man, a big level to me if you're looking for the super extra breakout. That's all I have on Amber.
Makes sense. Moderna was in the news this morning too. Just, I guess, quickly, the stock, they're announcing that they're reviewing the contract for the bird flu. So that stock remains in a downtrend. I don't have anything more to say about that. Doesn't look particularly good, but it's a stock that's in the news.
Palantir. Yep. I'll let you go, Christian.
Oh, Okay, can I bring I'll bring my charts up real quick?
Yeah.
Palantir, I mean, this would be a place for it to bounce. It's back all the way down. It's given back this earnings gap. I'm seeing this in a lot of stocks right now. I would watch to see if it can hold that earnings gap, which is right around 83. It's not moving too much pre-market, but that would be my line in the sand is if it holds 83.
I absolutely love 91.70. That's where it's trading right now. Last 2 days high, 91.69, 91.70. If you could clear there, you get up to 99. Almost a gap fill. And what do you know? It's at the Christian finding support at the gap fill, and Christian, who created the 50-day moving average. Dennis,
Hood?
let's go. Yeah, let's go to Dennis with the hood because he was in the hood.
I sold it. Buy the dips, sell the rep. I sold my VRT. I sold a lot of stocks that I bought last week because they honestly moved up too damn far. So the VRT I sold yesterday morning. I bought that thing at 88 bucks 2 days ago. It went up 13% in 2 days. What do? And you're in a fade market and your stock pops 13% in 2 days, you sell it. So as much as, I was buying stuff a couple days ago, catching the falling knife, the knife's bounced. Hood got down to 40. I didn't pick this one up at all, so I didn't do that great on this one. But the VRT did very well on $44 up to 51. I mean, if you think the Bitcoin's bottomed, if you think that tariff talk is going to all work out in deals, if you think that we're going to go back in this raging bull market here, Hood's probably a buy here. I think there's so many unknowns. I'm just buying dips and selling rips.
Okay. All right. 9:01 here. Wow. We are in for one choppy session once again here. I mean, you saw it in the pre-market. You saw it in the after hours. You saw it in the pre-market. I don't know. High, low of the day in, guys. We're not going to get back up to 60, 14, 50, and we're not going to get down to 59, 60. I mean, I don't know. That's kind of the way I'm feeling right now. Tomorrow's guest, Frank Holmes. Frank Holmes will be joining us from U.S. Funds, and he wants to talk about Hive. We're going to focus on Hive. So, final comments from you? Final comments, gentlemen?
Go ahead, Dennis.
No, I'm just the same thing. I know the tariff talks may be boring to a lot of people here, but I mean, I think it's going to continue to drive the bus. I think, focusing on individual stocks at this point in time is difficult because everything kind of just, tech's moving together. And obviously, certain sectors move up, certain sectors move down, but understanding the rotations is important here too. But it's going to be continued headline drops that are going to be moving stuff. You need to be prepared for this, that, we rally up significantly here. Could be a headline to take us the other way. We fall significantly, could take a headline to take us back up. So I think you just keep fade moves.
Yeah, I mean, I think the market is still the tape is still very sensitive to the headlines. I'm waiting for some separation. So when a tariff gets announced, I want to see not all stocks go down. Right now, I see all stocks going down. Some stocks getting hit more than others, but you can't tariff technology companies. And I want to see some names begin to stay and not sell off. Because I think that this market still needs to develop a callus when you hear about tariffs. And I don't think we're there yet. I want to see less and less impact as, tariffs are announced and so forth, because the market has to get used to it and these headlines, and we're not there yet. So that's my thought for now. And I like Dennis's, take the money and run right now into rips.
And again, people are saying, well, Dennis, you said you were buying these stocks in your long-term account. Why are you selling them already? I don't know. Long-term stocks go up 8, 9, 10%. When you get 8, 9, 10% in 2-3 days, I mean, we're just in that market that's saying, hey, shorten your time frame right now. Sometimes, we're going to be in this 2020 where every sell you regret because the stocks just continue to go higher. That is not the case right now. Every sell and every buy, when you're buying the dips on the rip, have felt pretty darn good. So I think we're just, again, in this environment where it's prudent to probably shorten your time frame a little bit.
You can change your mind too. Guys,
for sure.
Traders, investors, you are allowed to change your mind. Do not stay anchored to yesterday's information. You have to adjust to the information at your hand. So you could say, hey, I'm buying something in my long-term portfolio. You could change your mind. I mean, that's the whole thing. You do not want to stay rigid and say, oh, well, I thought this 2 weeks ago. That means I got to stay in the stock. No, You got to change. You got to adjust to the new information that's at hand and be able to change your mind when there's new information.
That's just excellent summary there. And, my Tesla is the prime example. Here I am 4 or 5, 6 months ago saying, that I think they're going to change the world with everything that they're doing. And, I was hugely convicted. It was one of the biggest positions, in my long-term portfolio. Well, it was the biggest one. But things changed for me. New information coming in, sales data from Europe coming in. And I'm like, man, I think he's doing some damage to the brand with his political views. It's not about being, conservative or liberal or, having political views here. People are mad at me. People think, oh, I'm this, hard leftist because I sold my Tesla stock. It's not the case. I'm just looking at it and saying, man, if half the country in the U.S. decides they're not going to buy Teslas because they don't like Musk, if Canada says we're not going to buy Tesla because we don't like Musk, and Europe, because, we've seen the European sales data, down 48%, down 49%. We saw it coming in. That's new information here. That new information is the reason the stock is going down. People are thinking it's just a natural correction. It's not, folks. Stock's going down because the sales data coming out of Europe was just terrible. It couldn't be worse. So does that get forgotten? Maybe. I think I'm not of the opinion that I can't go back into my Tesla position. I absolutely will if I think the story's changed. But the risk here right now is high. I don't know if there's being damage done to the brand. And when you have unknowns, you've got to lighten up. You've got to say, hey, I got this one right. I'm way up in it. I don't want to see those gains go away because he's pissing a lot of people off. So that's just new information. So to Christian's point, as you get a new information that changes maybe what your original thesis was, you need to adjust.
And Dennis, you need to save up to get your $5 million so you can get a gold card.
So I can come over and that's it. $5 million. I wonder how many people are going to do that. Some major criminals probably are going to do that.
I know that's funny.
A worry. A lot of criminals got $5 million.
It's so funny because
I don't know if that's the greatest idea in the world.
That was the first thing that came to my mind. Okay, and then I don't know. I was in the car with Lisa, and I mentioned that to her, and I go, oh yeah, I wonder who's going to apply for that. I hope they have a good background check. And she just started cracking up.
I think there's gonna be a lot of criminals that they have a lot of money. This is the issue I think you have is the people that are going to apply for that. Maybe the people you don't want in the country.
Okay,
I don't know, man.
That's it, Brent. End the show. We're going. It's almost the open. End the show, Brent.